Chief trader, whose last 3 stock picks are each up more than 9% since he told you to buy. He's back with 2 plays, 2 new ones. And Larry Shover in the pits of the CME. Okay, Larry, to you first. Hey, the guys behind you look like they're just waiting to hear what you have to say, so let's get to it. We're kind of sitting there waiting. Let's get to it. I mean, what did you make of today's action? We saw huge gains and then pared back just a bit.
Exactly. I think the question is, what isn't happening? We come in this morning, the Nikkei down 5%. Now, I know it's up 30% for the year, but still down 5%. A downward revision in GDP. Home sales didn't really increase as much as expected, and jobless claims added. So right now, bad news isn't necessarily good news. I just think right now the market is accepting the fact that we're growing ever so slightly, and even with tapering, the market is acting very robust right now. We didn't see any large sell-offs. Yes, we are off a little bit today, but still charging higher even with bad numbers today.
All right, well, Yudee, let's talk about tapering in the stock market, because the rallies, just let's face it, are not as strong as they were a couple of months ago, but the pullbacks are weaker than they were as well. So are we in some kind of sweet spot here where we get a slight pullback but then an even stronger run up in the market?
Yeah, I think the market is taking a breather in order to travel further ahead, right? So right now, the market just overran itself from the November lows. We came up over almost 25%. So now we're pulling back down a little bit. Of course, the question would it be that 3 to 8% pullback that everybody's looking for? Well, would it merely be sitting here just kind of consolidating back and fill a little bit before it takes the next leg up? Right now, everybody wants to buy dips. That's why we're not really dipping.
Okay, so you're taking the contrarian view here. You think that this is just too crowded a trade?
Yeah, right now, over the short-term list, we're definitely in the camp saying that, you know what, we're not going to miss too much upside over the short-term basis. We're just not. I don't believe the market is going to run up. Could it be up another 3-4%? Yeah, of course. Could it be up another 15% without me in it? I don't think so. So we go up 3 or 4%. We might pull back 7-8%. We're right back where we are right here. So I would rather right now be a little bit cautious and wait for a further pullback. So what happens if it doesn't? And I'll just have to miss it. I have enough profit already for this year, so we'll miss a little bit. It's okay. I do believe the market is going to pull back a little bit more, and I'll find a better opportunity to get in.
And we're going to get to your picks in a second. But Larry, you mentioned what happened in Japan, because it was an ugly day in Japan, a 5% drop in the Nikkei, and yet, just like happened last week with a 7% drop, this market kind of yawned. They said, meh, you know, they were oversold, they were overbought anyway.
Yeah, exactly right. I mean, I came in really excited, thinking we're going to have a lot of market action, but I have to keep in mind that the Nikkei is still up 30% on the year. JGB 10-year yields are nowhere close where we'd have to worry about them losing market access or any kind of monetary easing beyond what they're already doing.
Let me jump in here. Hold on one second, Larry. We've got Lionsgate earnings at the moment. Let's get right to Dennis Neal. How did they do?
Hello, Liz. A huge beat on both the top and bottom lines. Lionsgate kicking butt here, coming in with revenue of $785.7 million. Wall Street looking for only $753 million. And then earnings per share coming in at 66 cents a share. That is 50% better, if my math is right, than the 44 cents earnings per share Wall Street was looking for. This company has been coasting and surfing very well on that Hunger Games franchise. And we're looking for the next one coming out for Hunger Games in November. We'll have to see if they said anything about the outlook, but so far a huge beat for Lionsgate, especially on revenue, because Hollywood's been down 12% at the box office, so that's especially impressive for this program maker.
Well, and that's the point, Larry, is that so often we have been disappointed on the revenue side. A lot of great bottom line earnings reports, but we've been disappointed on the revenue. When a company beats on the revenue on both the top and the bottom line, you really got to look them over. And in fact, the stock is popping about a buck after hours. Go ahead, Larry.
Yeah, that's unbelievable. And options traders got this one wrong. Options traders had put skew, the price people pay for downside protection, in the 90th percentile. A lot of put buyers right now, so they were dead wrong. The stock people are overwhelmed with what they're doing right now, but you have to consider the TV guide, consider the fact that they're doing production with The Orange is the New Black, and the other shows, Anger Management, Mad Men. This company is on fire, and I have to say, options traders got it wrong today.
Okay, well, we got no sooner had we finished up with Lionsgate than we got Krispy Kreme. Their earnings coming in. Dennis, what are they?
Yeah, then the stock just popped 4% after hours on these good results. Krispy Kreme beating Wall Street estimates on earnings, bringing in 20 cents a share. Wall Street looking for only 17 cents a share. And the top line revenue coming in, also beating Wall Street, coming in at $120.6 million. Wall Street looking for $116.27 million. The company raising its forecast earnings outlook for fiscal year 2014 as well. That's another good sign. And same-store sales for this donut seller up 11%. Anytime in a big retailer like that, you can do a double-digit increase in same-store sales on something that really makes you fat. That's pretty impressive, guys.
Well, you're looking at that big number. Again, a rounding error, but 11.4% for same-store sales for KKD. This was a company that was so hot in the late 90s, 2000, and then suddenly it became too hot. To see it come back like this is pretty fascinating, isn't it, Dennis?
Yeah, it sure is. And, you know, these food fads kind of go in cycles. And who knows, maybe Krispy Kreme is coming to its own yet again.
Well, what they're trying to do actually is expand their menu. And Larry, that's the point, whether they can appeal to people beyond the donut eaters out there, whether they can get a good breakfast menu going, expand. They're getting into yogurt. Clearly, they may have the capital based on these earnings to do that.
Yeah, and they've learned from their lesson. I don't think they want to be at Dunkin' Donuts. Maybe they don't want to be a chock full of nuts either, so it's somewhere in between where you're right. They want to compete for that breakfast market where Starbucks, cinnamon rolls and everything else, that's after the facts. They sell coffee. I think they want to do both. They want to give a breakfast experience and really create their own niche. So long term, it's probably a really good buy.
Good to see. All right, thank you very much. We want to go back to Yudee Chang because people get excited about certain individual names. What are your favorite names right now? And let's go macro first. In which sectors are you looking?
Yeah, I'm still looking at the same sectors. One is being the home builders.
Yes.
I love the home builders.
Still.
And actually related industry as well, building materials, even the casualty property insurance. So that's one sector I like. Another sector I like is actually the financials. I like the financials. If the economy were to continue to grow, the financial is going to continue to be well. So these two sectors are my favorite.
Well, specifically the casualty insurers when it comes to financials, do you look at them as that part of the same phylum?
Absolutely so. That's another way to play the related industry of the home builder also. It's not just a home builder, but the real estate market in general. People have been talking about the residential area, but if you look at it, the commercial area are start to coming back as well. So you put the residential, commercial together, eventually you have to go to property and casualty insurance.
Let's look at an individual stock. We're looking now at an ETF here that you can buy into, but you're also big on Toll Brothers. The interesting thing, it sort of ties into what we were talking about in the market, is that when you have these small pullbacks, that's the time to get in. And even though housing has been a lot of people would say, overbought over the past couple of months, Toll Brothers has had a slight pullback, just of a couple of bucks. Maybe now's the time to get in.
Yeah, absolutely. It's the thing that everybody is saying is very easier said than done, right? You're supposed to buy low and sell high. So when something pulls back on a good issue, you need to buy it. But, David, also, if you look at the home builders,
by the way,
yes.
Hold that thought, Yudee. I just want to, while we see that stock chart there, you should keep in mind that the stock was trading at 39 just about a month ago. So it has had this pullback from 39 down to 34. Go ahead, Yudee.
Yeah, but the stock was trading where? Back in 2007, in the 60s. Exactly. So that's why I said, this industry, if you think about it, housing industry is also very cyclical and very momentum-based industry. It doesn't just flip around every 3 or 4 months. It actually takes a cyclical time frame of about 5 to 7 years. So I believe we're only in the beginning stage. Let's say the second or third ending of a major up move. So that's why on a pullback
I wish we could package your energy. We'd make $1 million. Thank you very much. Yudee Chang, good to see you. Larry Shover, we're going to check in with you just a couple of minutes to see how the S&P futures close.
Larry's energy is pretty up there, too.
Larry's right up there with him, yep.
Thanks, gang. Coming up, ever made fun of someone